Happy Thursday. This is Pedro De Leon.
Hey, and my name is Chihiro Kurokawa. So we are the hosts of Beyond Stocks, and we're super excited about our guest today. Her name is Evelyn Zermeño, but I'm not going to steal Pedro's thunder. He's going to introduce her. But what we are is everything alts, right? If you want to learn about building wealth through anything beyond stocks and bonds, we're your guys. Two regular dudes investing in alts and bringing great guests like Evelyn to you. So Pedro, take us away here.
Yeah, no, thank you, Shihiro. So Evelyn is a seasoned banking professional with a passion for empowering entrepreneurs through sound financial practice. With extensive experience in the banking sector, she specializes in providing tailored financial solutions that drive business growth. Evelyn, I'm glad to have you on the show. This is definitely an opportunity for me to learn, and I'm sure Shihiro too as well, is to learn about how a bank framework is when it comes to investing into a startup or a company that is looking to acquire through an acquisition. So yeah, I'm gonna pass it over to you.
Yeah, thank you so much, guys, for having me on and for the partnership throughout the years. So I can't believe, Pedro, that we've been partnering for, I think, like maybe 3 years, if I'm not mistaken. You
Years.
blink your eye and time just goes by. And then Shihiro, now that you're partnering with Pedro, and so you guys are doing amazing things to educate entrepreneurs. And so it's definitely an honor to be here and share what I know. So yeah, I mean, you definitely hyped me up there with the introduction, but really all what it is commercial lending. So I've been in banking for 13 years. I've helped numerous of entrepreneurs from many different backgrounds. I've helped corporate employees buy businesses and become entrepreneurs as well, or those who are in the growth stage, helping them scale with capital, with cash flow, help with cash flow needs and everything. So it's been a fun and a very interesting and just empowering journey just to help lots of business owners. And so I'm excited to share what I know.
Yeah, sure. So for our audience, that are watching, it's all about alternative investments. And I know that part of acquiring a company or lending some funds for someone that is looking to acquire a business, right? So as a private lender or as an investor, right, looking to get into a joint venture. What are some of the things that I should start looking into when I'm going to look at acquiring a business or looking into investing into a operator that is going to acquire a company? So what's some of the things that you guys have? What's your framework? And so we can better understand that.
Yeah, that's a great question. So every different bank is very different, right? So you've got your corporate sized banks, you've got your Bank of America, Chases, Wells Fargo's of the world. Then you've got your regional sized banks, like for example, there's Truist, there's Region Bank, within that size, and then you've got your small community banks. So we all go through just a standard guideline when it comes to lending and giving capital and some of the red tape that we have to go through because of the Fed and all the regulations. But each bank is very different. So when I get someone who comes to me and says, hey, I want to acquire a business, or I want to buy a percentage of ownership in a franchise, or I'm working with an exit advisor and they've got several businesses out there that I can purchase, and I've heard really good things about that business, that they cash flow, I've got the experience, whatever that looks like, right? One of my first questions that I ask is, hey, why do you want to purchase the business, right? So we have to understand the why and what their goal is. Are they purchasing the business because they're truly very passionate about it and they're going to be hands-on in the trenches with it, day to day in the operations? And eventually when I get, yes, that's my why, then it helps me understand from a lending perspective, what we're working with, right? So we're going to go based off of projections. What are the future plans of the business to grow? Are they looking to expand it later on? Are they going to be, the franchisor where they're franchising it now and selling it to other business owners? What's the footprint that they're going to cover? Is they going to stay in a very highly populated area like DFW, or are they going to go out to El Paso? So we look at all of that. So we look at, have they taken the time to really research the business? Have they really taken the time to understand the why, and can they articulate that? And do they have projections? Have they done their research? Have they done market analysis? So those are the very first questions of what we dig into in the beginning.
No, definitely. That's definitely a good point to show, because I know when it comes to investing, just as an investor, it's like similar questions, right? Like, what is it I'm going? What are you? Why are you doing this? Why are you raising capital for this? What's your background? Because it's kind of part of the due diligence, is mitigating your risk, right? And I'm
Yeah.
sure that's how you guys also mitigate risk that way. That's a first starter, because you want to make sure that the money you're going to give out to them is going to be in good use, right? So yeah. And then,
Yep.
so with that, when it comes to evaluating like a business that they're looking to acquire, or looking to start,
Mhm.
or looking to expand, like, what is your process to kind of do a market analysis and understand, like, okay, if we're going to grow this company here, this manufacturing company, or we're going to acquire this company in a DFW, like, what is some of the, I guess you can say, key markers, right, that you use in order to say, okay, this is an opportunity, and we are definitely can make this, a green, give them a go for this.
Yeah. So that's a great question also, because I also get, like people who have been in corporate for 10, 15, 20 years, and they've got a good fat 401k, and they're thinking outside the box to see how they can diversify, their residual income and things like that. And so to answer your question on that piece, what we use at the bank, we have high-tech tools that gives us a market analysis within a few minutes, But when I'm having these conversations with someone that is looking to buy the business, I try to see if they're working with a consultant or an advisor, or just someone or a business evaluator, just someone at a very, I wouldn't say sophisticated level, because I get people of very different experiences, but I would say someone who is very experienced in doing market analysis research. But we look at highly populated areas, like, Frisco is growing in the restaurant. They've got a lot of, many different types of new concepts coming from California investors that are moving into Texas. We look at all the new franchises, like golf simulators seem to be a big thing now. And so we look at what's trending, what's coming within our markets, what's worked. For example, I touched on the restaurant industry. Banks all around see that as a very high risk industry, so we also look at, all right, are they going to withstand within after 2 years, is what they say, right? If a restaurant makes it after 2 years, then they're most likely going to make it to 5, so we look at those type of metrics and data. And then we look at, what's highly profitable, So if someone wants to come in, has never had experience on, let's say, for example, a golf simulator, or let's say, for example, like a independent concept restaurant or bar, and they're like, nobody's doing this in the Metroplex, I want to do it, and it's like, wait, hold up, pump the brakes, because you have a better chance of being successful buying a franchise, a really well-known brand, something that's been historically around, versus just starting something brand new. And so it's just an uphill battle, and you definitely don't want to discourage people when they're passionate about starting a business or buying a business. But the bank has all those tools, has all the historical data, and we have our underwriters and risk management for a reason, to help navigate entrepreneurs on that level.
That's very important to have that, those key metrics, right? Because it's, that's definitely can start lowering your risk level as far as investing or so.
Yep. Exactly.
Hey, Evelyn, I personally know why I would want to work with you as opposed to a Chase or Wells Fargo. But can you explain to our listeners what the benefit is to going to a smaller bank like yours? Why that's better?
Yeah. Well, thanks for bringing that up. So not to knock, the big banks of the world, right? Because they definitely have a lot of market share. But what they do really good at is they invest in very high tech technology, right? So with the millennial and Gen Z era, and with technology just being at the forefront of any service industry. I think they do a fantastic job at making sure we have access to online banking tools. They're very convenient. You see them in every corner. They've partnered with retail shopping centers, like you see Capital One ATMs and Target, things like that. So they make it very easy to do your banking. However, I do like that you brought up the differences. So I think it's very important, whether you're thinking about starting a business or whether you own a business and you're growing it, that you have a really tight relationship with your banker, and unfortunately, the bigger banks on a corporate level, there's so much turnover, and they're closing branches, they're opening new branches. It's very hard to establish a relationship with a banker at a bigger bank, so it's very important to do your research, even with the banker that you're going to give your business to. What sizes of companies do they work with? How long have they been in the industry? Do they work at a size bank where there's going to be a lot of growth? So you always want to hear, when you're interviewing bankers, if a banker says, hey, we're in the growing phase, that's such a green flag, because that means they're open to business. They're going to get very creative in how they can service you and how they can make a deal work. Yeah. So right now I'm at a bank where we are in the growth phase. So we're very excited to get new business, and we'll take it all day long versus a Wells Fargo who already has a lot of customers. They see you more as a number versus building that relationship.
Right. So I have a question. So what are some of the things that you've seen that companies are not ready prepared when it comes to getting lending bank money?
Yeah.
What are the stuff that you see commonly?
Yeah, that's another great question. I'm glad you asked this. So one of the things that I have seen within my experiences, when I'm having the conversation, as to what the business, the why, the background, everything, we get into the conversation as to organization of financials. So have you done your groundwork? Have you done the projections? Have you done the market analysis? And usually I provide a checklist depending on how green they are in that area. But what's important as well is things that they can start working on for themselves is credit, right? So credit, I know it's a very touchy subject, because in a market that we're in right now, everybody's pretty much living off of credit right now. And that's totally realistic, and that happens also as an entrepreneur. You got to use money to make money. You got to leverage money to make money. But it's the way you use it, right? The responsibility is what we look at. So making sure that, you don't have any delinquencies on your record. If it's a bankruptcy and it's over the 7-year mark, still sharing the why behind it and being prepared to articulate that. Missed payments, the story has to match up and has to make sense, because really your credit score is pretty much your character chart. That's your character demonstrating to a bank or to a lender or to someone who's going to lend you money. Okay, is this person going to max it out and not make their payments on time? Is this person responsible? Can they manage their money well? Not only that, but it shows us the competency of a business owner. You got to be able to make very hard decisions sometimes regarding funds, cutting expenses. Can you navigate through harsh times, even from an economic standpoint, things that we can't control, as consumers. So those are the things that we look for: credit, financial organization. Do you have a good CPA in your corner, right? So when I have conversations with business owners, sometimes they'll tell me, oh yeah, a friend does it for me. They do my taxes, or my brother does it for me, or my daughter who's a nurse full time, I'll just get her to do my taxes. And, they're at a stage of their business where if you leverage your partners, you can go way more to distance than where how you're operating right now. So, good CPA in your corner. Do you have, partners outside of your sphere that help you? So that's what we look for.
Yeah.
Would you say those are your biggest like showstoppers when people don't have those ducks in a row?
Yeah, it gets a little challenging because everybody has a timeline, right? So when they have a project in mind, or if they're buying real estate for their new business, someone can come in and make a deal and an offer, and that's it, right? And then guess what? It's the banker's fault because we didn't close on time. And so, now I quickly realized, like, okay, I need to educate my client a little bit more on why it's important to have, all your ducks in the row, like you said. And so for me, it's more of like, okay, I need to take the time to really educate a little bit more as to why that's important. And I will say that I love those type of situations because 5 years down the road, 8 years down the road, they are very loyal and they're very thankful, and I know that they're always going to come back saying, hey, I remember when you told me X, Y, and Z, and that really helped me. So I think bankers have a very, very important job. And if they take the time to educate their customers, they're going to win. Probably not now, but later on.
Yeah. I want to say two things right now. One is like deals don't get done without debt financing, period.
Yeah.
There's very, very few all equity deals out there. So that's number one. And number two, like I just like sending people to you because part of it's a vibe thing, honestly. But beyond that, like I know I could tell straight out of the gate that you're the kind of person that like fights to get the best terms. And then most importantly, what you just talked about, you help people through the process, and that sort of patience just really resonates with me. And so that's why I love sending you people when I know somebody needs banking, needs debt financing for their new deal or they're expanding their business. You're the first person I call.
Thank you. I appreciate that.
Yeah, definitely. When it comes to expanding your business, what are some of you say green flags? It's popped in my mind. What is a green flag for you guys? Like, so
when they've done their research. So I really love when a client has taken the time. So let's say, for example, they're buying a franchise or they're expanding their franchise, and they've got the FDD, which is pretty much the financial pro forma of the franchise itself, right? They've had a CPA and they've taken their advice, and they've got, the 3 years of tax returns. They've got the P&Ls, or they've already spoken to a consultant from their franchise that they know enough to be a little dangerous. So, and then when I say, hey, I need, your list of items, and they get it to me that same day, it shows excitement, it shows passion, it shows eagerness, right? So sometimes I'll get, clients that are like, hey, I've never filled out a personal financial statement. I don't take that necessarily as a red flag, but it just shows me how green they are, and so we got to slow down and take the time to really educate on a little bit more on the financial information that they need. And then I also take it as, okay, this person is probably going to need like a business consultant, or perhaps maybe, a bookkeeper, or, they're going to need a little bit more guidance, but green flags are just eagerness. They're responsible. They're responsive to, the ask, what we're asking for. And they're also not pressing on when the funds will be available, because they're taking their time to make decisions, and so, and I also really like when they meet with the banker and they've got a notepad with them. So they're writing down, they're taking notes, writing down the feedback that's given. You can tell they really care, and they're wanting to learn. They're eager. So those are the green flags that we look for.
I want to say, like, what's the percentage of green flags that you usually get?
So you know what? I see the percentage is probably like 80%, 80 to 90%. Wow. Yeah. So when you're operating, when you're working for probably a community regional sized bank, like for example, at my job now, I own my own book of business pretty much. So all the clients that I source, I manage and I help grow. And so you kind of really get to pick and choose the people that you want to work with, and even though you're representing a bank or a corporation, you still have to follow by their guidelines and their rules. Absolutely. But you kind of get to pick and choose, which I love. And so when it comes to that, personally for me, I look at a person of character, if they show up late to our first meeting, they're 40 minutes late or something. Or they're kind of demanding in a way, they're like, well, I can go and take my business somewhere else. And I'm like, okay, I mean, you're welcome to do business wherever, So I look at character. It's a big deal for me. I look at, is it important for them to establish relationship, right? So I can't tell you how many times, especially during COVID times when we had the CARES Act, the PPP funds.
Oh, yes.
So banks were making very minimal money off of that. We couldn't charge beyond a certain percentage. I think it was like no more than 1%. So you would get people that got rejected from their longtime banks like Wells Fargo and Chase, and they would go running to the community-sized banks because we were open for business, right? And then I would get people that would say, yeah, if you do this for me, I'll bring you all of my accounts, I'll do more business with you and everything. And it's like, okay, all right. Yeah, absolutely. And then as soon as they got the PPP funds, they would wire it out back to Chase. And so it's like, come on, man, like they didn't help you in the first place. So again, I think it goes based off of the relationship. We look at character. We look at, who recommended them. I think all of that's still very important, even in a very AI driven world.
Yeah, no, absolutely. I mean, that's typically like if you're raising capital for any deal, same thing, right? That's just how you come across. I've seen so many folks that are like very aggressive and like, give me your money, right? Instead of getting connected with your investors. And so sometimes it bite them in the butt, but it just depends, right? But absolutely, this is relationship based. It's important when it comes to anything that has to do with that or equity.
Yeah, absolutely.
I want to ask you about a particular type of entrepreneur, and this is fresh in my mind, Evelyn, because I just talked to somebody yesterday. So he was a career corporate finance guy and decided he wanted to be his own boss. And of all things, he bought a paint company. So I meant to say glue. It's an adhesive company. It's like an 80-year-old adhesives company, and he's killing it. He bought it in 2019, and he's more than doubled the EBITDA, like really doing well. But some banker had to believe in this man, right? Because he was a corporate finance guy, and he's like, I'm going to buy a factory, right? So, and that trust paid off. So have you had any deals or clients like that? And can you just kind of walk us through that story?
Yeah, so I have. And wow, I'm so glad he chose an industry that is, everybody's going to need it, from a commercial standpoint to a consumer standpoint. It's the type of business that the cash flow is always going to be in positive, right? Like we've got a business that's lifelong guaranteed. And so like in those type of situations, yes, we work with SBA. So there are some banks that work with SBA, which if those who don't know, SBA is pretty much a federal backed loan. So it's funds given to banks from the Fed, from the government, where it gives the opportunity for, the longtime corporate guys. It gives an opportunity for veterans. It gives an opportunity for those who are wanting to start a business. And there are funds allocated to banks and, and brokers and firms that start their own SBA bank that can lend using the government as a guarantor pretty much. And so like in that situation, I have done a few like that where, someone was very passionate about fitness. And so they wanted to buy a fitness franchise. And this individual was very passionate. And I will tell you, the business he was buying was not cash flowing. However, he was so passionate and he had a really good savings saved up where he was willing to bet 50% down. And, and he's like, I'm willing to bet on me. And so when I like to hear that, I like those are going back to the green flags. He's willing to put half of his savings down, for this business and bet on himself, and then being able to close on that and give him the opportunity to do so and be an entrepreneur for a business he's very passionate about. It's a big win overall, So yeah, like in that type of situation, yes. We look at industry, we look at, the competency of the individual. We look at, how the skin in the game is what we call it. How much skin in the game are they going to put? And so we saw that with, for example, with my example.
I have one more question. And so it's still relation to similar to the question to Chihiro. Is there particular industries that you guys like to lend to when it comes to acquisitions?
Yes, yeah, there is. So I was having a conversation with, I think he's a doctor, and he was looking into wanting to see what business to purchase, and I was running through some of the stuff not to purchase, like, and this always changes. I'm not saying that this is going to be the same list, a year from now, 2 years from now, 3 years from now, but right now, I've seen a lot of people exiting the Airbnb business.
Really?
It's getting harder for people to fill in those spaces, fill in their Airbnbs. And there are people who invested with hard money lenders. They went to banks, they went to brokers, lenders to be able to buy Airbnbs. And I remember it was a trend, even like on social media. And there were, these MLMs that were getting people to get on Airbnbs.
Wait.
I can't tell you. Go ahead.
MLMs were doing Airbnbs?
Yeah, it was this whole like movement, right?
Wow.
And so everybody wanted to be an Airbnb investor. And what's crazy is that I got like maybe 10 of those on my desk. And out of those 10, probably two made it to where I could refinance, their properties, and we did a cash out and things like that. But yeah, we're seeing a decline on investment real estate. So we just got to be a little bit more careful as to what it is that they're doing. Like, for example, 5 corporate guys come together to guarantee a large medical office, right? So also thinking again, people are working from home, they're slowly transitioning back, but what are the odds of that space being occupied 100%, right? So it's like, do you have those leases lined up? Have you had those conversations? Have you worked with, a realtor or someone experienced to help you fill up those spaces? When a bank becomes the lien holder of your business, whether it's you're purchasing real estate, equipment, whether it's the expansion or you're buying a franchise, you gotta always have your resource of payments, like the way to pay us back, right? So you gotta be able to articulate that, and either you have hard assets that we can pledge, or it's cash flowing. So that's what we're dealing with. So Airbnbs have been a little bit more difficult to lend on. Restaurants, I think that's always going to be a trend, because restaurant industry, hotels as well. When we saw the effects of COVID, people weren't occupying the space.
Right. Yeah.
Hotels. We like warehouses. So more of like under your CNI. So like your construction businesses that hold a lot of material, have assets, have equipment. Like the glue adhesive business that you were talking about. So when you chat GBT or Google, give me a list of businesses that AI won't impact, right?
I love that.
Pretty much. So all the ones that are going to withstand, the technology waves and the differences with that, so
you were not supposed to, share that secret, but okay.
Oops.
Any other asset classes or industries that are just going through a bad part of a cycle right now? That was fascinating what you just shared, by the way.
Yeah. And I would say, if you're not having these conversations with your banker, you need to ask them, hey, what are you seeing? What kind of businesses are kind of suffering right now? Which one are the ones that are making money, stuff like that. So you need to be having those conversations with your banker. As far as like other businesses that I've seen, mostly restaurant, like boba shops, smoothie shops. People think it's easy, and I mean they're a lot less expensive to buy and to get into, but long term it's just harder to retain employment, and you really got to be selling, like, when you think about it, each drink is like $5, $6. Right. So you really got to make enough spread to like pay back the bank and then pay your employees and make some revenue off of it, things like that. So mostly restaurant, mostly real estate investing. I have seen some multifamily because it's hard to collect rent right now. So, I mean, I've seen struggling. I've seen many come and say, hey, I need help with cash flow. I need a line of credit. And unfortunately, here's another big secret. And it sounds extremely contradicting, but I want people to understand, and I'll explain the why. Banks will not lend you money when you need it. They won't. I mean,
because there's a DSCR component, yes. Right? Yeah.
Yes, there's a DSCR component. Banks will always lend you money when you don't need it. And again, you got to think about the bank as an investor, right? There's a very popular show out there named Shark Tank. And if you're a growing entrepreneur, or if you're wanting to buy a business, I would highly recommend you watching that show, or, getting educated in that space. But, the bank becomes a lien holder. And so they're going to want to know how you're going to pay us back. And so people will always say, well, I don't understand. When I need it the most, you won't give it to me. And that's like, well, we need a way that you're going to pay us back, Yeah.
So let's explain to our listeners, like, what DSCR, it's called debt service coverage ratio. So if your business, let's say, generates $100,000 a month, then the bank is going to look at that, they're underwriting that and say, well, then we're not going to lend you a $90,000 a month mortgage payment, because that only leaves you $10,000 a month to do everything you got to do with this business. So they're going to have some math involved that says, we have a certain ratio, and for $100,000 of cash flow a month, we're going to lend you a mortgage that's big enough to go to $60,000 a month, or whatever their guideline is. That's what Evelyn's talking about.
Yes, exactly. Yeah, thank you. I can tell there's a private equity guy on on the podcast. Bringing EBITDA and DSCR. Yeah. So the general rule, so everybody who's watching, so you want to be at a 1 point. So the general rule, I would say for our bank and for most banks, that is a DSCR of 1.25 is what we look at. Now, when you're dealing with a riskier business, let's say the restaurant, right? Or when there's a shortfall in collateral, so non-real estate related, right? So you're looking at 1.4 or 1.5 is what we look at. Yeah. So not only are we going to look, does it cash flow, and are you able to pay us back, and are you going to be able to make money even with the loan that you have, right? We're also going to look at, does the business have any assets, or does the personal guarantor have any assets, and so we're going to look at that as well. And then projections, of course, for 2-3 years. So it's 1.25 would be the DSCR is general rule. And if you're going to do unsecured line of credit, right, we look at 15% to 20% of your annual revenue is what that is. So if you're
the most you can get.
Is the most you can get. Exactly. Absolutely. So if you're a company that makes, $5 million, you can't come to me and say, hey, I need a $10 million unsecured line of credit. It's like, oof, either
you're looking at probably $1 million.
Yeah, exactly. A million or a little below, maybe 800 unsecured, maybe 850, just to be conservative. You know, banks are very conservative for a reason, because we don't want to go after your assets if you can't pay us back, right? We don't want to have to go do that. So we're trying to set you up for success. And I think that's what I really want viewers to hear, is that all the feedback that's given, you know, I know banks don't have the best reputation, especially after the market crash in 2008 and things like that. I'm not saying that everybody is ethically correct, but I would say that that's why it's important to interview your banker and, you know, research their experience, because a lot of us really want to set you up for success, you know.
Right. No, this is definitely great nuggets, because that's the kind of question I've always been asked. Like, well, I'm making X amount of money every year, but can I double the amount of the lending if I can get it from a bank? I'm like, I don't think you can ever do that. You know, like, I don't think an investor will want to invest with you like this.
Yeah.
Like, you know,
Yeah.
but no, this is great, Douglas. Before I'm out of questions, but I wanted to share something that somebody on the audience shared with you, with us. It says Evelyn should post a video series on the general guidelines and recommendations to start a business. She's very knowledgeable and experienced in this domain. So I think this is a great feedback, you know, for those that are that we're watching. So definitely in the future we can probably put something together, you know.
Yeah, thank you, Daniel.
Yeah, absolutely.
Awesome.
So before you know, the end of the show, we just wanted to see if there's anything else you want to share to the audience, or how they can connect with you.
Yeah, so you can find me on LinkedIn. I'm under Evelyn Zermeño, and I'm on Facebook. Facebook, you know, I kind of mix it between personal and business, you know, and I'm also protecting the reputation and the brand of the bank that I represent. So, but if you want to check me out as far as what I've done, and if you want to check out the bank's website that I represent, you're more than welcome to look me up on LinkedIn, or you can send me a message through Facebook, and we can set up a time where, you know, we can interview each other and see if it's a good fit for your business. You know, and if you're not getting the attention or the advice or the guidance where you're currently at, I'd be happy to, you know, have those conversations. For me, it's more important to win your trust and to build a relationship. We're in it for the long run, right? So happy to have those conversations early on.
Awesome. Evelyn, thank you so much. Thank you for sharing some of this great, you know, secrets of the banks, you know, stuff that people should be knowing about this. But there's always I know there's a lot of questions. I'm sure Chihiro does too. And yeah, definitely. So you're looking at this, if you're watching this through the recording, you know, in the future, definitely get with Evelyn if you're looking to get a loan from a bank or expand your business. Other than that, stay tuned for the next show next Thursday. We going live. Take care.
Bye.
Bye.